Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here's your weekly technical analysis of LME 3-month nickel and zinc. I'll start with LME 3-month nickel. I said the following back in mid-July. It was at the time referring to the mid-April to late May bearish Andrews pitchfork. Nothing had challenged this for its dominance, except when the market dipped down into a congestion zone below. And I quote, "Nothing challenging is for its dominance. At this time, however, something may be on the horizon. This is in the form of the lows from 2019 and 2021, specifically the August 2019 high at 18,850, the June 2021 high at 18,610, and a nondescript high from May 2021 at 18,265. That last one halted the decline last Friday and started the current move up. That pitchfork is now retired. Those lows and congestion as a zone were enough to turn the market back up until the start of August. That was when the market hit up against the overhead combination of the flatlining long moving average, currently 25,100, the short medium moving average, currently 22,130, and the August 2011 high at 25,195. You can see what happened when it tried up through all of those. Prices managed to get to the August 2011 high but failed to close above any of the resistances. And prices headed back down, but only as far as the May 2014 high at 21,610 and the February 2014 high at 22,155. Now prices then gathered some resources during August, trying higher in the meantime, but easily battered down just by the short medium moving average. 3 weeks ago, the market was pressured lower enough by the declining short medium moving average that it briefly tried lower. However, the attempt was quickly snuffed out, such that 2 Fridays ago the market punched up and through the short medium moving average, gapping higher as a start. Early last week saw an exploitation of that break higher, but only as far as those same resistances as before, the long moving average, the August 2011 high. However, this time there was a new factor. The declining medium moving average, currently 24,250, had entered the frame. This looked like it might be a repeat of the action back in early August. Yet last Friday's action saw a significant move higher, closing over the medium moving average, with a combined key reversal up and bullish engulfing pattern. This was followed through with yesterday's action, which had the highest close since mid-June. However, yesterday and again today, the market has run into the same overhead cap that we saw in early August and late June, the August 2011 high and the long moving average. This is a 4th attempt at these levels, and so far it looks like an unsuccessful attempt, with no real push for higher, though there's no real retreat lower either. The jury is still out on this move higher, so it'll be interesting to see the next few days ahead. The action since mid-July is reminiscent of a possible ascending triangle, though, as I said earlier, it's still early yet. This also goes for any idea of a bull channel. LME 3-month zinc. I'd often spoken about how I had on occasion taken a step back and looked at the monthly charts to get a better picture. From these occasional actions, I'd noted 2 patterns in operation. The principal one was the 2015 to 2020 bullish Andrews pitchfork. The most recent events involving this pitchfork were the end of May and start of June, when the market approached the middle time from below, currently 40.69, and was rejected. And then again in mid-July, when prices moved down within sight of the lower time below, currently at 27.42, before taking fright and moving back up. This rise was capped by, amongst others, the flatlining long moving average, currently 36.01, the declining medium moving average, currently 34.26. This one is still important even now. Also the 50% Fibonacci line of the April to July move at 36.82. And finally the second pattern, the lower trend line of the large 2020 to June 2022 ascending expanding wedge pattern. Now this pattern broke down in June, so a retest up to the trend line in August, and a subsequent drop that includes last week's outside week. Let's now look and see what this second pattern has left us with. Well, the primary target has already been achieved, but the secondary, much harder to reach target X1 is still live and out there, though it is a way lower, below the bottom of my daily chart in the 2082 area. Looking at the prospects for target X1 being achieved, I would say to be fair to treat this at the very least as a longer term target prospect. There are a few more patterns that I'd like to discuss. The first is the March to April bearish shift pitchfork. The action on this pattern had mainly been around the middle time, currently at 26.36, but by early August, prices have broken up higher out of this pattern. So why have I still kept this pattern on my daily chart? Well, the last 2 to 3 weeks have seemingly seen the pattern repair itself. Thus, the upper time, currently at 31.93, is now once again acting as resistance, if a bit suspect. Finally, the action from May to August has allowed the construction of another bearish Andrews pitchfork, with the market currently in between the upper time, that's currently at 34.27, and running roughly parallel with the declining medium moving average, whilst below we have the middle time, currently 27.71. This is an early bearish pitchfork, but it has surprisingly similar and familiar bearish angle of attack to the other bearish Andrews pitchfork. Thus, this is worth keeping an eye upon. So, to sum up, we have a very large old bullish Andrews pitchfork that's still live. Within this is a much older and smaller ascending expanding wedge pattern, and 2 more recent bearish Andrews pitchforks also within the old bullish Andrews pitchfork. As you can imagine, this cannot go on like this for much longer. Something has to give. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. Here comes the final bit.